Hello and welcome back to Effortless Investor, the channel where we keep investing simple, realistic, and hopefully effortless. Today's video is a bit of a special one because I'm celebrating 1 full year of investing on Trading 212. 12 months, dozens of stocks and ETFs, a few regrets, and some lovely little dividends later, and I'm still here, still investing and still learning. In this video, I'll be sharing the biggest lessons I've learned over my first year, what went wrong, what went right, and how this tiny portfolio of mine has actually performed month by month. So whether you're brand new to investing or just here to check in on someone else's progress, I hope this gives you something useful, or at the very least, a bit of reassurance that not every portfolio journey starts out perfect. Let's dive into it. Let's start with the not so glamorous part, the negatives. Now, I do want to start by saying that this is not the first time I tried investing. I originally tried 9 years ago, but I did no research and ended up investing in managed funds like it was day trading. It was not a smart move, and in all honesty, it started similarly this time around. In the beginning, I was hit with an avalanche of information. Dividend yield, PE ratios, ETFs, REITs, TERs, market caps. It felt like I needed a dictionary just to understand half the videos I was watching. And like some beginners, I made one classic mistake. I tried to do too much, too quickly. In the first couple of months, I was throwing money at all sorts of stocks and funds. I had no clear goal, no strategy, just a vague idea that investing was a good thing and I should probably be doing it. Spoiler alert, that didn't go well. And you can see it clearly on the performance chart here. June and July were both down months, with June alone dropping by 12.34%, even though I only started on the 24th of June. So in the course of the first 7 days, I lost 12.34%. Looking back on it now, I'm surprised I carried on. This was followed by another drop of 2.73% in July. As we can all agree, not a great start. Within the first 6 weeks of investing, I was down a total of 15%. This could all be attributed to a bit of panic selling, some overconfident buying, which cost me real money. Not a fortune by any means, but enough to give me a reality check. But August is where it starts to get better. I stopped and asked myself, what's the goal here? What am I trying to achieve? And once I landed on the goal of building a portfolio for the long term, over the next 20 years, one that grows slowly, eventually pays me every month, and doesn't keep me up at night, things started to turn around. I simplified the portfolio, I set clear targets, and I continued to stick to consistent contributions. My monthly contributions started at £50 for the first 4 months, but after some budgeting, I was able to increase the contributions to £100 per month, which continues to this day. And you can see it started to work immediately. By the end of August, I had bounced back by 1.4%. September continued the trend, bumping me up another 2.4%, with October bringing another slight increase of 0.8%. What happened towards the end of October, however, shaped my portfolio massively. October was the month in which I purchased my shares in Palantir. It was only about 10 days after this purchase that the Palantir stock started to increase dramatically, jumping from $41 on November 1st to $55 on November 7th. It continued its rise through November and December, which is why you can see the growth for these months as 10% and 20% respectively. However, that which goes up must come down, and the following 4 months echoed that most cruel of sayings. January was a bad start to 2025, being down 8%. February compounded with another 4%. March and April weren't too bad in comparison, but that 4-month period did leave me questioning a few times if this was for me. Those same feelings I had 9 years prior resurfaced. It was uncomfortable, of course. Watching my portfolio dip wasn't exactly fun, but it was also incredibly valuable. It taught me to zoom out, to stop obsessing over the daily ups and downs, and to focus on the big picture. It reminded me that volatility is part of the game, and that if I can stay calm when the market isn't, I'll be just fine. I made no significant changes to the portfolio during that 4-month period. I simply let the portfolio recover on its own from what appeared to be a normal market correction. As you can see from the last 2 months, in May and June, the portfolio has started a nice recovery trend, which I'm hoping will continue. You can see from this column on my tracker that I'm still down around 8% for this year, so it'll be interesting to see how the next 6 months go. Maybe I'll do another update in December just to close out the calendar year. You can see that the bulk of my portfolio is weighted to VWRL and EQQQ. Combined, they make up 65% of the portfolio, which is right in line with what I'm looking for. These are the backbone of the portfolio and have both continued to bounce back from the market correction, as they're currently up 13% and 21% respectively since April. But let's be honest, all those percentages are just unrealized gains. Let's talk about the real reason people clicked on the video: the dividends. Over the past 12 months, I've earned a grand total of £10.11 in dividends. Now, I know what you're thinking. That doesn't seem like much, but it's all relative. If we take a retrospective look at the dividends, we can see the momentum is building. In the first 6 months, I earned just £2.19, but in the second 6 months, that jumped to £7.62. So through consistent investing and increasing my positions each month, my dividends have tripled in 6 months. Whether that level of growth will continue, only time will tell. But each little payout reminds me that the strategy I've chosen to go with works. Slowly, yes, but surely. If we dig a little closer, we can see that 40% of my total dividends have come from my largest holding, which is VWRL. But given its weight in my portfolio, I would always expect this to be the case. I'm really excited to see how the dividends increase going forward, as the last year has shown that over time, pennies can turn into pounds. I've just got to stay consistent. Hopefully you will too. Just be sure that any investments you make align with your own goals, research, and risk tolerances, as it is your capital that's at risk. So, what's the verdict after 1 year of investing? Well, I made mistakes, plenty of them. I lost money in the beginning. I let emotions get in the way. I spent way too much time watching red candles on charts. But I also grew my portfolio to over £1,550. I tripled my dividend payout from the first 6 months, and I stayed consistent, even when it was tempting to quit. That to me is a win. So, that's my first year of investing. All the wins, the wobbles, and the wonderful little dividends along the way. If you're just starting out yourself, I hope this video gives you a little bit of perspective. Your portfolio may not be perfect on day one, and that's okay. What matters is sticking with it, learning as you go, and enjoying the small victories along the way. Now, if you're curious to see how things have been progressing month by month, I've got a series of monthly portfolio updates where I break down exactly what I've bought, how things are performing, and which dividends have landed in the account. So feel free to check those out next. Thanks again for watching, and thank you to everyone who supported the channel over the past year. Here's to year 2. More dividends, more growth, and hopefully more effortless investing. Until next time, keep it simple, keep it realistic, and of course, keep it effortless.